Viewing, but we're basically live already. Okay. So setting up your webinar. I'm zooming my thoughts already for live. Yeah, it looks like we are live already. So hello everybody on this beautiful sunny Thursday afternoon, September the 3rd. Hard to believe we're already in September. Thankfully, the weather is staying beautiful. And as usual, we're back with another edition of my weekly Money Matters webinar. And as I announced yesterday and earlier today, today's topic is private lending. And we're going to be discussing, what is private lending, where, because for many people out there, this could be a bit of a buzzword, as have been some of the other topics I've addressed on this webinar. Anyway, I have with me today a very special guest, this lovely lady, Susan Flanagan. I know Susan from the local real estate investing community, and Susan is a specialist in this area. And I'd like to take just a couple of minutes to read her bio to you, okay? Give me 1 second, guys. All right. I have it. I think I would have brought it up already, Susan, but okay, there it is. So Susan is a seasoned real estate investor with over 25 years of experience. She has done many different investing strategies, from buy and hold, student rentals, rent to own, flips, and along the way, she added creative financing strategies to build her portfolio. She has been lending her own funds for mortgages for more than 12 years, as well as using private funds for her various real estate projects. That experience has led her to becoming a mortgage broker specializing in private money for mortgages, which is also the name of her brokerage and website. And that's private money for mortgages with the number 4. Susan services 2 types of clients: the person who needs a private mortgage and the investor who has money to lend out for a mortgage. She considers herself a matchmaker. Oh my God, I love that, Susan. Connecting lenders and borrowers for a win-win scenario. That sounds awesome. So Susan, I know you prepared a few slides for us. Do you want me to, first of all, any starting words before?
Well, I first off want to say thank you for having me on your podcast. This is, I'm
my pleasure.
Yes. So hopefully I can shed some light on concepts for people if they to either learn more or something new, whatever, that hopefully it helps.
Absolutely, Susan. I knew ever since I started my little webinar series that I was going to have you, that I wanted to have you on as a guest, because for people who are not connected to the real estate investing world, this topic is a big unknown, I think.
That's
for
right.
Many people out there. So, and yet people may hear the buzzword, they may hear about it, and I just want them to hear about it from somebody who actually knows what they're talking about. So,
okay.
So with that said, I will bring up the slides that you prepared for us. Let me make sure they're ready to go. Okay.
All right.
Perfect. All right. Oh, you know what? I'm so silly. And I was going to ask you to do this. No, I have to share my screen and then I will go into presentation mode. Okay. There it is. Share.
While you're doing that, I'll let people know. First and foremost, there we go. So people know, I know what I'm doing with private mortgages, with real estate investing, but as far as presenting, hey, I may not be the most professional. It's getting the point across though for people. So if you don't catch what I'm saying, please either put questions in the chat. Yes. And or to get back later, and I'll have my information at the end as well that people can get a hold of me. So this first slide, I hope this hits everybody hard, because it's true. If you don't find a way to make money while you sleep, you will work until you die. And if you think about that, what that's really getting at is that there's only 24 hours in a day. And we can't work all of them. And even if you could work all of them, you can only make, when you're trading hours for dollars, basically you're going to make a living. It can be a good living, but if you really want to be creating wealth, you have to find other means. So why I like to start with that slide is because what I'm talking about with private lending, it's a vehicle. There's many vehicles out there. And so this is just one vehicle that could help you. If you're a real estate investor that you buy properties, there's times you're going to probably need to look at borrowing private money. If you are an individual who has money and you would like to make your money work for you, so while you're sleeping, your money's working for you, this is a vehicle that can do it. Okay, so that's kind of my intro to where we're heading with this.
Absolutely. And Susan, just so you know, on previous sessions of this webinar series, I've had other people come and talk about different types of investments, whether it's, using a robo-advisor to manage your money. And so that's something akin to mutual funds, but with lower fees. Last week, we had somebody talk about segregated funds, which, even though they carry higher fees, they also offer certain unique benefits, which would appeal to a certain demographic, particularly seniors, people that are looking to maximize the value of their estate. So, and of course, the idea of having your money work for you, that's something that's definitely
that's key for all of it. Absolutely.
And
okay.
And another reason, just again, as some beginning words, another reason I definitely wanted to have you on is because, as many in my audience are becoming aware, with all the money printing going on by the central bankers, people have legitimate concerns about the devaluation of our money supply. The more money you print and it's not backed by value. So in order to keep up with what we expect, or many of us expect, we're gonna be hitting some inflationary times. We need our money to be working harder for us.
Yeah.
And we need, as much as possible, a higher rate of return that we may be getting definitely at the bank in those GACs,
Yeah, like that's a joke. So I guess you're going to control the slides, are you? I'm ready for number 2.
Yeah. So
okay.
Any words about this one?
No, if you can move me number 2.
Yeah. Is this good?
I don't see it.
What is a private mortgage?
No, I don't see the slide.
You're not seeing my slide. Ooh. New share. I'm not sure what happened. Oh, yeah. I'm not sure. You know what? Let's try this again. I had another.
Oh, okay. Never mind. Okay, now we have it. So.
No, it's my bad. Yeah.
Okay, so basically, so that people can understand, the long and short of it, a private mortgage is not a bank mortgage. That's how you can remember it. There are different lenders in the banking system. There's an A lender, which are the regular banks that we've all heard of. And then there's B lenders that a lot of people have never even heard of these banks, but they're banks. Well, a private mortgage is what we call a C lender. Okay, so it is an individual, as it says here in the slide, or it can be a business, or it could be a group of investors, but it's definitely not a bank. Okay, and that's important to know. And you can move on to the next slide. Because private mortgages have their own rules. We don't have to follow the bank rules. And that's what makes them that they can be beneficial to people at times. And there's many reasons why it can be beneficial. So just so you know some of the qualities. First off, it's usually only interest-only payments. So if I lent you, Latadia, let's say I lent you $1,000. All you'd have to pay me is the interest each month. Okay, they don't set it up like regular mortgages where you're paying part of the interest and part of the principal. It can be done that way, but it usually isn't.
And the benefit sorry, Susan, then the benefit of having interest-only payments is that you can get the money at a lower monthly payment. Is that?
Well, let me get, I'll get into yes and no, because this is, private money is expensive,
it's not
no matter how we twist or turn it.
Yeah,
okay, so the fact that it's only interest only, thank goodness it's only interest. So it's usually a short-term loan. Now I have on the screen here, I say between 1 to 3 years, but most loans are a year or less. It is to help somebody out of a situation, and I'll get into that further in another slide here. The interest rates. Now this might be a shocker to many people watching. What? Between 7 and 15%? Yes, that's what it can be. So if you were lending a first mortgage to someone, it could be between 7 and 10. If it was a second mortgage, it could be between 10 and 15. And in fact, it can be even higher than that. I use those numbers because that's what I work with through my brokerage. We don't deal with super high risk mortgages for our lenders. Okay. And like I say, a first or a second mortgage. And so just to clarify that for people.
Yes, please, because some people may not even know what a second mortgage is.
Yeah.
Yeah.
So a first mortgage is the one that the initial loan you've gone for. Okay. And let's say your house is worth 500,000 and you got a first mortgage for 250,000. And then at a later date, maybe you had some trouble where, oh my gosh, you've created a lot of debt for whatever reason. COVID is a good example.
Yeah.
And then you want to refinance your mortgage in a year's time, but your debt ratios are too high. You go, how can I fix this? So one of the things that people do is they look at taking out a second mortgage. So they would then go to somebody like myself and say, I'm looking for a second mortgage. We still would have to set it up that there's equity left in the property, but we could maybe lend you. So say you needed 100,000 to fix up all your credit issues, to pay, off your credit cards, make everything look squeaky clean on your credit report. So maybe we get you 100,000. So now all of a sudden your house, if anybody pulled title, there's a first mortgage against it, and there's also a second mortgage against it. Okay. And so the second mortgage is in second position.
Yeah.
Okay. They're not tied together. They're two different lenders. So and I'll carry on with that example as I'm explaining it, because it's a very common one that people can be using to help themselves move forward in their personal situations. If you ever did that, then the idea would be, yes, it's expensive money. However, during that year, if you needed that full year or maybe only 6 months to clean up your credit, get yourself in a better position to now go back to the bank and get a new first mortgage to cover both mortgages at a very low rate. Okay, because the banks are really low right now. I mean, there's ones, it's ridiculous right now. So that's a goal that a lot of people are looking to do. That in itself is a strategy, I would say, for people to consider with low money out there right now.
Right. Yeah. Yeah.
So
So in other words, if they have some equity in their property, but they may be tapped out everywhere else, and because of that, their credit may be impacted, because everybody knows, like if you're maxed on your credit cards, that's likely to affect your credit score, and your lender bank may not feel comfortable putting in, offering you a home equity line of credit or doing a refinancing at this point in time. Because they usually require, I know even from a home equity line of credit, I think they usually want 700 plus credit score, if I'm not mistaken.
Yep, and they'll only lend you a certain percentage. So this puts people in a position that they can now go to a bank and they can shop around for the best rate. But when you're in a situation where, oh my gosh, my credit score is not good, the works. When your mortgage comes up for renewal, even though you have a ton of equity in the house, the only thing you'd be able to do at that point is renew. Right. So if somebody is trying to be proactive and go, okay, well, gee, it's coming up in the next year or two, these are things you can think about. Okay, it's a strategy for the regular homeowner.
Yeah.
Okay, so sorry, I got off on a tangent. That's
that's valuable information. Yeah.
Yeah, but now also again, going back to private mortgages, the application process is different from the bank. We still need to get all kinds of information from somebody, but the lender is looking more so at the property, and you are secondary. They're going to look at you personally of can you service the loan? They'll look at your credit report. A credit report tells you a lot more than just a number. It can tell me how good you are with credit over the years. So somebody, and I will give a good example, if there's somebody that it shows they've had bankruptcies, they've gone through consumer proposals, they are constantly late with things, and this is just not because there was a situation in their life, but it was ongoing, that is not a good candidate no matter what we say. No matter what happens, okay? Just because you can't have terrible habits your entire life and expect somebody to take a chance on you. But most of the people we deal with, life happens. They've had a job loss. There was a death in the family. There was a move. There was so many things that caused their personal situation. So you'll lend on that.
Yeah. Then
Um,
I had some experience with that myself, and we can talk about that later. But yeah, when I found myself a single parent,
yeah.
things were tough that first year and a half, and I ended up using private money.
Yep. And it's nothing to be, ashamed of. It's like, hey,
Yeah.
it's a tool that we can use. But
Unfortunately, I didn't know you at the time, so things didn't go as smoothly as I'm sure they would have with you.
Yeah.
But now I know you, and that's
Yeah.
why we're talking.
Well, the other
So,
thing, since we bring that up, and you and I have talked about this so that people understand, the idea of private money over in the past has had a bit of a negative name at times. And I think it's because, as with any industry, there's good and bad people out there. And there are, so for instance, when I vet somebody's situation right off the bat, the main thing I need to look at is the whole picture. And honest God, if I'm looking at it and I can see, why would I give them a second mortgage? Because a year from now, they're going to be in the same position they are right now. And if I can't see that you have a solid exit strategy, oh, sorry, my dog just came in. The dog walker just brought her back.
so cute.
So I guess what I'm getting at is there are some people that will lend you money privately and they don't care because they honestly would love it if you don't pay. You know why? Then they could put you into foreclosure or power of sale for Ontario, and they could end up with your house.
Yeah.
Okay. Those are the ones that give private lending a bad name. Okay, so you want to make sure if you're ever looking at borrowing, you're doing it through somebody that you know and trust, lending you the money and doing it for the right reasons, or go through a broker like myself.
Yeah.
So,
Well, we'll talk about it. I think in my case, it was, well, first of all, the interest rate was very, very high, but it was a number of factors. I also went for a higher LTV. We'll speak
yeah.
about that. And
So yes, and all of those things do play into it.
There's profile.
Yeah, we have a whole scale of things that we're looking at because you got to remember when you read my bio and you said I'm a matchmaker? That's true. I'm listening to the borrower. I'm listening to what you need. I'm seeing all your needs, but I'm seeing what you bring to the table because now I got to put my lender hat on behalf of my lender and go, is this a mortgage that is secure enough for them to feel comfortable to want to lend their money? So I have to make it a win-win for both sides. And I feel good doing that because, like I say, first off, I've been lending my own money for many years. Plus, I've been a borrower for many years for investment purposes. That's another whole topic, as we both know. So sorry, carrying on here. So the lender absolutely has a registered charge on the property, and that's the security.
In other words, if the borrower doesn't pay, you have as much of a right as the first mortgage holder, or you might be the first mortgage holder, you have as much of a right to foreclose on the property or basically.
Oh, absolutely. There's a whole process in there. That in itself is another whole topic of how it happens. But yes. Oh, back up there. No, one more. There, stop there. Okay, so this is what I was saying before. A lender, this is what a private lender looks at. They look at your story, the whole story. They want to know what makes it that you need the money. Okay. The property is key. Where is it located? How easily could it be sold? And then the exit strategy. And if those three things can't line up to make it look like, okay, this is a good deal for a lender and it's a good opportunity for the borrower to be able to borrow this money short term to fix their problem. Okay, so that's why those three things are key to keep in mind. Okay.
And Susan, just for people who may not know, the type of private lending we're talking about here is where the lender's money is secured against a piece of real estate.
Oh yes, these are not promissory notes. This is not, lending. Oh, I have a boat. I'm a mortgage broker.
Okay.
Yeah, I'm talking about private lending for mortgages. Yeah, because if somebody just wanted to borrow money, there's many institutions out there that you could go to, payday loans, all these kinds of things.
Right.
This is totally different. The security has to be real estate.
Got it.
Okay, we could go on. So why would anybody borrow private money when it's so darn expensive? The key question.
Slide?
Yeah, you can go on this next slide.
Okay.
You know what? These are just some of the reasons. There are so many reasons. Sometimes it's not like what the example I gave you for the person who wants to clean up their credit. Even though it's expensive, at the end of the day, their end result is going to be worth spending the money to get it done. Okay, so there's many reasons why people do it. Yeah, I mean, somebody will say, oh, what's your most common? Well, I network with a lot of real estate investors. So yes, a common one is when somebody wants to buy a property, it's needs a lot of work, so the bank won't finance it initially. They'll use private money.
People may not know that.
Yeah, and then they'll
if a property is not livable or it's just in really poor shape, your bank won't lend on that. So then your only solution is a private lender.
A private lender, but it's short term. It's short term. So you would fix up the property, then you either go back and get refinanced with the bank, or your exit strategy might be you want to sell it. Your exit strategy might also be, well, gee, I can't, if you can't finance it yourself with the bank and you don't want to sell it, you want to keep it as a rental, you could also at that point bring in a joint venture partner and let them qualify at the bank, and you guys split the, so there's so many, those are just, but all of these, if are a new immigrant, I'll use that for an example. There's many people who come to Canada, they have money, but they have not built a credit rating yet. They have not been established yet. So they want to buy a house. So what do they have to do? Like there's so many reasons. And
so in that case, as long as they provide sufficient down payment, and maybe I don't know if this is the right time to speak about what kind of, for first-time home buyers, if you're a first-time home buyer in Ontario, you can get into a deal with as little as 5% down if it's over 500.
But this does not fall into any of the first-time home buyer rules.
That's right.
If you're looking for a private mortgage, I could tell you right now, you're going to need at least 20% down payment.
20.
There are some people that will let you go have just.
Did you say 25, Susan, or 20?
20, minimum 20. Those are that's in my brokerage. There are people. Yeah, you could get someone to maybe lend you 90%. You only have to put 10% down.
So you're going to be paying
You're going to be paying very hefty. But again, why I won't participate in those bigger rules, the risk, the higher the risk, the higher the rate. And they go hand in hand.
Yeah.
So I just don't want to put lenders into situations that are at a higher risk.
And the risk there is that if there is any kind of market correction where the property value goes down and you don't have enough meat in there. That's the wrong word. I'm a vegetarian.
No, it's true though. It's a good enough. Yeah.
If there's not enough equity in the property and there's been a market correction that wipes out that equity, now the lender is, basically leveraged at 100%. And if you miss a payment and they have to foreclose on the property, they're still going to have some transaction related costs. So they could be in a situation where they're losing money. So that's why.
And I do know there are people out there who will lend to a friend or a family member 100%. And my first reaction to that is, well, I'm happy for you. But for the person who's done it, I say, please be careful, because it's not about somebody doing something bad and not paying you. It's about life issues happening that in the end, things changed and they couldn't pay you. So now all of a sudden, in order for you to get your money, you don't lose your whole capital if somebody didn't pay. You would lose some, because the property has to be sold. So let's face it, lawyers get paid first. Realtor gets paid. And then what's left over, the mortgage holders get paid. And if there's anything left after that, now the homeowner can get paid.
And not to mention that sometimes properties need some work to be able to put on the market, or if you're going to sell it as is, either way, you're probably going to be looking at some level of renovation. So all of that has to be taken into account.
Okay, let's go to the next slide here.
Yeah, I mean, these are all great reasons why somebody may need a private loan. Okay. Now,
okay, so there are advantages. If you are somebody listening to this and you have money that you want to lend, I'm first off going to clarify that. Money that you want to lend could be cash. It could actually be money from your house line of credit. It could also be money from registered funds. And I'll get into the registered funds. I think it's in the next slide. But advantages of lending your own money for mortgages, like I said at the beginning, this is a tool to be able to make money. You can be doing it through mutual funds a million ways. Well, this is just another one. And so basically you're holding the mortgage. You are now the bank. Okay. You don't own the property. Some people get that confused. You don't own it. The person who bought it still owns it. You're the one that's the mortgage holder. And what I like about mortgages, I've been doing it for so long now, as an added investment to buying real estate, because it's tangible. I can see it. I can drive by it. It's brick and mortar. And I can control what I'm doing with it because I'll research the market on it. Like it's, to me, it's way better than mutual funds. Don't get me going on my story on those.
That's okay. No. And I think, especially a number of people in my audience have a real estate investing background or some experience with that. So they're believers in real estate investing. The issue with mutual funds is that if you're in any sort of equities, you're going to be subject to market fluctuations, and not everybody has a stomach for that, and maybe.
Well, it's also the fees. The fees are the other part that bother me, but this is why I'm such an advocate for lending money on mortgages, because it's predictable. It's consistent monthly payments. There's no fluctuation. If your mortgage payment is $1,000 a month, that's what it is. If you don't pay, then we go to the next process to get our money out.
Yeah, with that said, Susan, I think one thing that people should be aware of is the issue of taxation, right? And when you're investing in private mortgages, it is considered interest income.
Yes.
Which is taxed at a higher rate, which is why, because it's 100% taxable. So if you're, you know about that. So which is why it's very advantageous to do this sort of investing in your registered vehicle. So if you have money sitting at the bank, in mutual funds at the bank right now, and maybe you're a little concerned about what's going to happen to the market once the consequences of all the money printing are going to be hitting us. This would be a way to diversify your risk, and also to add some predictability to your returns, because whatever what you get is what you get. And again, because these are tax sheltered investment vehicles, you're not, in every year you're not going to get a bill from the government, oh, you got to pay us all this interest,
but to your point, I don't know what that noise is, but to your point,
there's stuff going on in the unit next door. I apologize.
To your point though about paying taxes, I've always said, like, you know what, it's the reality. So if you're going to make money, you have to pay taxes. So, so there are a lot of people that, I mean, they also will lend money out of their business. They have a corporation maybe, so they could let that money sit there and do nothing because they don't want to pay taxes, or they make money and pay taxes. Like, what's the goal here? So I don't use taxes as an excuse when I'm to myself. That it's like, okay, I know I plan for it. I go, okay, well, this, I have to claim this through my accountant that I lent this money. And
you made so much money. Yeah.
And I made some money.
Yeah.
But I didn't go to work for it. That was the point of my whole first slide. Right.
But what I'm trying to say, Susan, is to whatever extent people can maximize their registered vehicles, because we all know there's a limit to what the government is going to let you tax shelter.
Yes.
And there's a certain percentage, whether it's a TFSA, RSP, a LIRA. I would say definitely maximize that, even, especially if you're investing in this sort of vehicle. And then if you've got money left over, hey, good for you.
Now, the only thing, there's the advantage. Go to the next slide. I want to see. I can't remember what I have on that. Oh, okay. How much can you make? The one disadvantage I would say if somebody's trying to compare using whether it's registered funds or cash is that this is short term. Whereas if somebody put their money in, especially when it's registered funds, I find some people want a vehicle that they're not getting their money back in a year to then have to put it back out again. So sometimes
I see what you're saying. Yeah.
It's a bonus. There's a plus and then there's a negative, but it just depends on what the person's goal is. So for instance, I have people that they go, oh, I've got all this money that I'm going to be buying another property in a year's time, but I don't want it sitting there doing nothing. So they want to lend that out.
Okay.
And they only want to do it short term. So people have to just know what's their ultimate goal for their money.
Got it. No, that makes sense. I hear you. So with that said, you work with a lot of borrowers, and so let's say the initial deal that somebody were to lend on, the 1 year is up. This borrower has moved on. What's the likelihood? And let's say this person was happy with the high return they were getting. Is there a good chance that you may be able to find them?
Oh yeah, I mean, but I don't make any guarantees to anybody. Their money, and this brings up another good point. Their money is not with me. They are on my lender list. And to be a lender, I'll take a second and go over that. But first off, and this is only for me, if you wanted to be a lender through my brokerage, you have to have at least 100,000 available. Okay. So then you'd have to fill out a profile. It's not an application. It's just me learning more about you. It's just a 1 page. And then we talk because I need to know you. I need to understand your level of education that I need to give you on this, some of your preferences, all that sort of thing. And I need to know, is it registered funds or is it cash? Because that makes a difference what mortgage I can put you into for time wise. And so using your example, all of a sudden the mortgage is finished, your money's back in your account, get you back on the list. And then as things, now I can't promise you when the next one comes up that's going to suit your needs. So I'll be quite honest. I say to people, I said, please you can't put that pressure on me because I cannot guarantee you. So I say then
perfectly. Yeah.
So get yourself on a few lists then. You could call other brokerages. The difference between my brokerage and a regular brokerage is that this is all I do.
Yeah.
Whereas at a regular brokerage, most brokerages have some private funds available.
Yeah.
But that's a side part to their business.
Yeah.
Okay. So, so anyway, going now to how the money works. So on first mortgages.
Yeah, no, go ahead. I had another question, but it just.
It went, okay. You pull it back and I'll finish this.
Hopefully it comes back to me. Because
Okay. For first mortgages, like I said earlier, we're usually talking anywhere between 7 and 10%. And where does that number fit? It depends on the story, depends on the house, depends on your situation. Like all of that, that's where the number isn't exact. Okay. Second mortgages, of course, are higher because technically, I guess you might say a second mortgage is considered more risky because you're in second position. Okay. So let's say, for instance, you are participating, you have lent on a second mortgage, but the person you lent to, they were falling behind on payments. And usually if someone's falling behind, they're falling behind on both. But let's say it was just the first or whatever. What happens here, worst case scenario, you can get your lawyer to put them into power of sale, get them to sell the house, get your money. But in this situation, if you're in second position, you must be prepared to keep that first mortgage up to date then. Because if they put them into power of sale, they don't care about who's behind them.
Right. And I have come across situations, now it's less and less common, but I have seen cases where, and I think there was some funny business going on where the second mortgage holder, where I think the first lender foreclosed on the property, and the second and then they sold the property for way below market value, even though there was a significant second mortgage in place, and that second mortgage got mostly wiped out.
But see,
But that's not very likely to happen because I believe there are some regulations where when you foreclose on a property, like when you, maybe I'm not using the right terminology. I think that's the term they use in the States. Here we say when the property goes into power of sale, right?
Yeah. Well, Ontario is power of sale.
Okay, Ontario. Okay.
Yeah. And yeah. So,
how
yes,
can we make
and
sure
the rules are that, I mean, somebody cannot just, let's say it's a $500,000 home, they can't just turn around and say, well, I'll sell it for $200,000. It has to be at market value, and then they have to bring it down gradually.
Okay.
Okay, so I mean, there are rules in place. Yeah, that it's not like in the States at all. People think they can buy places rock bottom prices and stuff. No, there are protections in there. But
and not only that, but I know the CRA will tax you on the market value anyway. Then and if you say, oh, I only bought it for 30,000 or I only sold it for 30,000, like they're
yeah, but that has nothing to.
Yeah,
we're talking about the person that's in second position there.
Yeah. How can we protect them?
Well, how they're protected is that they have to. That's why, again, I say to people, I will not. There has to be at least 20% equity in that property. If it's a first mortgage and 20%, then there's no room for a second. If the first mortgage is only at 50%, and then you had a second mortgage, you could go up to maximum 80%. And I say maximum. Every once in a while, the situation might lend itself to 85%. Okay, but if somebody did lend on a mortgage, and this is good advice for someone to remember, you might have a neighbor that needs to borrow some money and you've got money to lend them. You have to make sure there's equity in the house once both mortgages are paid out, or for both mortgages, or else you, as a second position, you may not get paid.
Yeah, I got it. You're not just lending out of the kindness of your heart. You got to protect your
have to know
as well.
And that's why you want to do it through a lawyer. That's why you need to be on title and so forth. So now, just so people know too, there's sometimes lender fees involved, and what that is about is, okay, first off, when you get a mortgage through the bank, if you didn't pay, there's insurance involved, so the banks are protected. Right? Yeah. CMHC insurance. Well, if you get a private mortgage, there's no insurance involved. So that lender, the lender fee is more or less has come into play because it's a fee that's paid up front when the mortgage closes, so that they have some money. If worst case scenario, they ever had to go after you, they already got some money for you up front to get the process started. Okay, that's where the lender fee history came from. Now it's just almost commonplace. So for instance, a first mortgage, if I got you a first mortgage at 8%, there might also be a 1% lender fee. So in the end, it's going to cost you 9%. Okay, so that kind of thing. Same with a second, it might be at 11% and then a 1% lender fee or 3% lender fee. So people just need to know there's those fees involved, and they go directly to the lender. Then the borrower also has to pay for an appraisal. Most of these properties have to be appraised because the lender is going to actually, some lenders will just drive by the house and check it out themselves and lend you the money. But if you're through a brokerage, no, we need an appraisal. And I encourage everybody that they should get an appraisal, because that's your gold at the end of the day if things didn't go right. Okay. All legal costs and the broker fee is paid by the borrower. So legal costs, if you're the one borrowing, you'd pay for my lawyer, I'm the lender, and you'd also pay for your own lawyer. So I say to people, you should count on there that at least $3,000, maybe even $4,000 might be needed on legal fees. Okay, just to be safe. Okay.
I paid a lot for that private mortgage when I got it, but it served its purpose at the time.
That's right.
I made a mistake of overextending myself, and essentially things didn't go as I planned, and in the end I ended up having to sell the property. But at the time it was the right thing for me to do, because like I was in a situation where my other solution would have been to ruin my credit, which I didn't want to do, and I didn't. So it helped me, because if you ruin your credit, that's a worse situation because, when your credit gets impaired, there's, it happens, it would be like years that it would take you to fix it. Whereas this was, about a 1.5 year situation where everything.
Yeah. And I mean, it's good to hear you say that, because so many people out there now were given the quick fix. And what's the quick fix these days? Get yourself in financial trouble and let's claim bankruptcy or a proposal. And it's like people do not realize how damaging. It's not just damaging to your credit, to your financial situation. It's a mindset, right? It's damaging to the person that, because like you dealt with your scenario by saying, I got to suck it up and pay these fees. I don't want to, but I'm going to make it right. And it took me 1.5 years. So
I mean, again, and I could have, like, my intention when I took out that private mortgage was that I was going to reinvest the money and perhaps get into another deal. Unfortunately, because the money was so expensive. And again, I didn't know you at the time, Susan. And I also probably because, it was arranged through a third party. My broker at the time, she was a great mortgage broker that worked with the investor. I have nothing wrong with her, but it wasn't, I don't think, it was the profile of borrower that I was looking for a high loan to value ratio. And anyway, not everybody was willing to lend. And the people who did lend, they did so at a high interest rate. And again, there were a lot of upfront fees. Now, and I also was under some time pressure. So if I wasn't, but that's the reason people usually go to private lenders.
Yeah.
So it would have been nice.
It's funny though. I will tell you, because, like I said earlier, most mortgage brokerages have access to private money, and if they don't, this is what's interesting, and I'm giving a little tip here to people. Even if they don't have access to it, you call your broker and say, I need a private mortgage, and they'll go, oh, don't worry, I'll find it for you. Do you know what happens sometimes? We call it the daisy chain. And so they may not have access to the money through a lender, but then they have to connect with someone else to someone else to someone else. And if they are in the mortgage industry, everybody is part of the broker fee. So you've just paid huge fees because you didn't. So, I mean, and that's the other reason why I like to tell people.
Yeah, no, my broker was reasonable. That wasn't, she really did her best. It's not like the fees, she charged a very reasonable fee, but the people who actually.
I'm not blaming the broker. I'm just telling people what happens if you're not dealing with someone who truly deals with private lenders. And if you don't know, and they're going to find you, but I mean, they're doing work for you. Of course they should get paid. And so, and then there's some other brokers. I mean, there's good and bad in every industry. Right? Whether it be teachers, whether it be nurses, whether it be mortgage brokers, there's some people that do outrageous fees. And that's why I like to outline all this at the beginning so people know.
The fee I paid was higher than the 15%, if you can imagine that. So
yep, I can.
Yeah. But anyway, I learned from the experience, and I'm very grateful to now know someone like yourself that is exclusive in this space. So to the extent that I come across people that may be in a situation where they require private funds, or either for reasons similar to the situation I found myself in, or because they need it for investment purposes. They're working on a flip deal. The
one I'm just in the midst right now selling I have one in Burlington that is conditionally sold. I mean, tomorrow's the last day. It's sold. But what it was, I already had another project on the go. All my money was tied up. That was the Collingwood one I told you about.
Yes.
So on this Burlington one, I used private money, a first mortgage private money, cost me total of 10%.
Okay.
And for my down payment and my rental costs, I used another property that I own, and I took out a second mortgage on it.
Amazing.
Yes, it was costly, but I knew my numbers right from the get-go.
Yeah.
I knew I had to take all that financing right off the top in my mind and then go, okay, now how much are you going to be able to make? And I calculated everything. If I held it the 6 months, 6 months, which in this case, unfortunately, it did happen. It was 6 months. We initially expected to get in and out in 3. Well, I purchased it at the beginning of COVID, and you have no idea all the hassles that we had, including my contractor. Within a week, we hadn't even started really the demolition, and he comes to me to say, by the way, Sue, my wife wants me to stay home because remember the CERB coming out and stuff. I said, what the heck? I said, you're going to be in this house working all by yourself. He said, doesn't matter. There'll be other trades. My wife does not want me doing it. So he left me high and dry right at the beginning.
Oh my God.
I had to go, but you know what? You go to plan B.
Yeah.
Right?
Yeah. You adjust and you make the best of the situation. And by the way, it's not that uncommon, but I mean, this was a very uncommon situation that we're in the midst of right now. But you know, even my own experience with doing renovations, you've got to kind of expect that they might go over.
No, but this wouldn't have gone this long. It wouldn't have gone. I mean, we had, there's a lot that happened, but at the end of the day, it's like, we're fine. Yeah. I sold it. We didn't make as much money as we would have loved to. Because of the time, it took longer, it cost us more, plus,
there was a bit of an adjustment in the market, like at least initially. Now I understand.
Well, I mean, the market's on fire, but there were other things that impacted ours. Okay. Yeah. So anyway, I mean, that's just an example. So I use private money. Yeah. And I'm not it's learning to not be afraid of the cost.
Yes, and that's a lot of, and this is, even at real estate investors meetings, that's one of the first things we learn, that it's not, people are so afraid of high interest rates on a mortgage. And the first question people ask a mortgage broker, what's your best rate? What's your best rate? Not understanding that it's not just about the rate, it's also about the terms. And sometimes, you might be getting this amazing rate, but have you looked at what the penalties would be if you have to exit early for whatever reason? Yeah. That's just one example. So, and at the end of the day, I don't say who cares about the rate, because obviously you have to run your numbers, but if you can still make money borrowing funds at a private rate, at an expensive rate, at a higher rate, but it's a, you know your exit strategy, it's a short-term situation, and your example is perfect because your intention was to do a flip, and you knew you were gonna have the rental done. Your plan was for 3 months. Obviously we've dealt with some like very unusual circumstances, but it didn't matter. I budgeted for a year. Like, you take it for a year, you budget, but in my mind I budgeted for 6 months. Okay. And that's where I start from. I don't, even though your goal is maybe to get out in 3 months, I don't budget there at all. Everything is conservative. That's why I'm still making money on it. Otherwise, because we had so many things happen, we could have been in a situation where we were negative if I hadn't have been conservative with my numbers. That's amazing. Yeah. Okay, Susan. Anyway, let's move on to the next slide here. Yeah. Thank you for sharing all that, by the way. Okay, we're back to the risks of private lending. So all mortgage investments do carry some degree of risk. They have to, right? You're giving your money to somebody, but the way you can look at it, this is a very simple analogy. If I wanted to borrow some money from you, I said, I need $100. No, I need $100, but can I give you this gas card and it's worth $150? Don't do anything with it. Please just hold on to it. Okay. If I don't pay you back, then you can cash it. Is that a good deal? Yeah, I like it. That's exactly what we're talking about with mortgages when there's equity in the house. Okay. You're lending to somebody, but there's room in there that if something happened, they don't pay. So that's key to remember. And like I said earlier, the relationship between risk and return. So if somebody wants to get a higher loan to value, the value of they're going to pay more. It's all relative. And that's why when we analyze the deals when they come through us,
Then we present them to the lenders according to what we've analyzed. Okay.
And I just realized, Susan, we've been throwing this term around, loan to value, LTV.
Yeah.
People there may not know what it is. So do you want to just do a quick
loan to
explanation of that?
value. So it basically means the loan is for, let's use the gas card. The loan is for $100, but the value of that gas card is $150. Okay, so you're sitting with this item that you're kind of thinking, well, geez, it'd be good if she doesn't come back and pay me, because now I get 150.
Now, in the case of a property, though,
well, that's not going to happen. That's the thinking behind it. So if somebody truly did, so let's say $100,000 mortgage, it's easy math. I mean, $100,000 property, the value of it.
Yeah.
Well, the loan to value, remember I said you only lend 80%?
Yeah.
So I would give you a mortgage for $80,000.
Right.
If you did not pay me my monthly payments, and in the end, you did not, I had to put you into foreclosure or power sale, whatever term we want to be using here, to get my money out, I actually could recoup the property or just plain sell it. But the point of the matter is that 20% was key for me to have security.
Because that's for your protection. That's right. And we already, so the loan to value, so if you say LTV 80%, that means you lend up to 80%.
You lend up to 80%
of the property.
Yes.
Yeah.
Sorry, I know we get using terms and forget that not everybody knows.
I think that's just that's the main one that I heard. And
let's go to the next slide.
Sure. But in that scenario, Susan, I want to also make it clear, because in the case of the gas card, people are like, oh, I'll keep $150. Thank you very much. In the case of a property sale, though, you're
still a contract with that gas card, by the way.
Right?
There's still a contract with that gas card. You can't just keep it.
Yeah. So what I was want to make clear for people is that if you do find yourself in a situation of having to recoup your investment that way, because this person, for whatever reason, they were not able to pay back, and now you have to take over the property. When you sell it, I mean, your entitlement is really the amount that you lent.
Yeah.
And then I'm guessing your closing costs, things like that, and then whatever is left over, you still have to give to the person
Yes.
whose house it was, correct?
Yeah. Yes.
You can't just keep. So
that is well. That's there. No, but there's the difference. We're off on another whole topic.
Oh my gosh.
Foreclosure versus power sale. Okay.
Ooh.
In the province of Ontario, most people do it by power sale because you don't need to go to the courts. You can do it through your lawyer. Okay. And in that case, you're absolutely right. Once that house is sold, the first person who gets paid is the lawyer. Second person is the realtor. The third person is the first mortgage holder. If there's a second mortgage holder, then they'll get their money. And if there's anything left over, then you'll get yours. But if it's through foreclosure, that's a whole different process. And it can be done differently where there is nothing for the homeowner. But we don't tend to use that in Ontario.
Wow.
Out west they do.
Wow.
So that's another thing for people to keep in mind. It's complicated when it's a foreclosure. It takes longer. Do you know, in all reality, if you didn't pay me, I say I'm holding the mortgage for you, if you didn't pay me within 2 weeks of you not making a payment, technically, I could be getting my lawyer to send you a demand letter and start the process immediately. Most people give it some time, figure out the scenario, could we double up a payment next month? Like, they'll be kind about it, okay? Yeah. But legally, you could start it within 2 weeks. And by the time that house is put on the market and sold, you could have your money back within a couple months.
And that's through even the power of sale process?
Power of sale, foreclosure, not at all. It could take months. So that's why I say to people, they go, what's the risks of private lending? It's not that you're going to lose your money, your initial investment. It's, in most cases, if there was any kind of a problem, I would say it's the fact that you could be delayed getting your money. Because if it had to go to power sale, you're not getting payments while that's happening.
Correct. I understand. That makes sense. Totally.
Yeah. Plus, there's all kinds of other fees that add up in there because the contract, again, if people do these properly and go through a broker or whatever that has a proper commitment, there's all kinds of stuff that protects you. If
That's
you're
right.
late for a payment, what you have to pay, all kinds of stuff.
Yeah.
Okay, let's go to the next one here. I don't know where we're getting close to the time here. Oh, we were just talking about the risks. Okay, so basically, and notice how I put on the bottom here, you're advised to obtain independent legal advice regarding your decision to invest in mortgages. Especially somebody who's new at it, I suggest that. And then also being able to analyze the property and the whole scenario properly.
Now, that being said, the lawyer, not every lawyer, I mean, you want to use somebody that has experience in real estate.
It should be a real estate lawyer. Absolutely.
There always has to be independent legal advice because you've got your lawyer represent you and they've got the,
the point I'm making with this though, okay, when it comes to the mortgage, if you're the lender, okay, automatically you have a lawyer that represents you. If you want, I have different ones that I work with that I suggest to people if they want to use them, but that is for the actual mortgage. But if you personally want some independent legal advice, you do that on your own. The borrower does not pay for your independent legal advice. They pay for the lawyer for the transaction of the mortgage.
I got it. And I mean, legal advice, I mean, they could be, I would say expert advice, and you could be the expert. I mean, you've been doing deals for 25 years.
I'm more than happy to give somebody my advice. However, I'm not giving them legal advice.
Okay, I understand.
Okay, I'm giving them my advice of how I see this, and I do it all the time. Somebody says, well, what do you think, Sue? I said, well, this is why I think this is a good deal. I outline it all, but I also make it clear at the end of the day, it's not my decision. My name is not on it. You are on the mortgage. I am facilitating, I'm the matchmaker. I'm putting the lender and the borrower together, and now it's between, so I make that very clear because I'm not representing you.
Yeah.
So, I mean, and that's why I say to people, especially somebody that's newer at it and they want to, they definitely, anybody should be getting independent legal advice on any transaction they do before they jump into it. So, I wasn't going to go into each one of we kind of talked about a lot of these already.
Yeah, we did. Fraud forging, well, that's, I mean, I see.
But things to do with fraud, that's what your lawyer's there for the fraud part, to be checking all that.
Yeah.
We already talked about the property if it ended up having to be sold for less than what you purchased. Oh, tax arrears. I'll take a minute and talk about that.
Sure.
And that's an important aspect that we deal with when I'm gathering information from the borrower on your behalf. You're my lender right now. I'm gathering stuff like getting the purchase agreement for you. I'm getting their credit report. I'm asking for I want to see the tax statement. Now that's not so important for a first mortgage because that'll happen in the lawyer's office as well. Like they just do it. But let's say a second mortgage. You want to make sure if this person's behind on their taxes, plus they took out a second mortgage, CRA is always going to take precedence for payment. So we want to address that. But some people are taking out the second mortgage to pay their taxes.
Ooh, wow.
So that's cool. That's fine. As long as it's all in there and the lawyer deals with it. So like, I'm kind of like that first line of defense here of gathering all the appropriate documents for you and sharing with you the story. And then once it gets to the lawyer's office, like that's why they pay attention to that. They also pay attention to things like, is the insurance up to date?
Yeah.
Can you imagine somebody's insurance isn't up to date and and it's not just up to date. What happens when you are a mortgage holder, now all of a sudden your name is put on there as the lost payee, meaning if there was a fire, they're going to come to you to pay you out before they're going to give money to the homeowner. That's critical. Banks do that all the time, right? So now all of a sudden we're the bank. So that's why I do say to people, if you want to lend your money, yes, it's nice to just lend it directly to your friend, but there's so many behind the scenes things that you need to know. You should do it in the beginning with a
Properly, use
professional
it
to learn.
properly. Yeah, and using the professionals that will protect you. So lawyers,
Yeah.
I remember when I borrowed, when I took on that private second mortgage, they definitely asked me for. They actually had to confirm with my insurance broker,
Mm-hmm.
my property insurance broker, that the policy was enforced on the property.
Yep.
They had to get a statement from the city that I didn't owe any property tax.
That's right. Yeah. And
They
you
had
had to have a first mortgage
from the
statement.
first mortgage, they had
Yeah.
to get a statement from the first mortgage holder, again, saying that I was up to date and with the mortgage. So they do, I can say the lawyers in that case definitely did their job. Title search was done, everything was
Yeah.
done. They even inquired, I had, they even flagged the fact that I had a rental water heater or something, and there was a loan pertaining to that. Even that was flagged, and they asked, what is this all about? And
Yeah.
yeah, so in the end, no, so they knew what they were
They
doing.
have to do their due diligence. You
Yeah,
have to.
and they
Yeah.
charged a pretty penny for it, which I had to pay for.
Yeah.
I mean, that's the cost. That's that's
Yeah.
part of the cost of borrowing. Yep.
Yeah. Let's go to the next slide here. It's too bad I can't see them on the side here. I'm not sure where.
Yes.
Uh,
Oh.
no, I put that. That must be my mistake. Okay. Okay. This is now if you wanted. Remember, we were talking about registered funds. We already talked about it. That people can lend money through their RSP, TFSA, LIRA, RIF. And these three trust companies are the ones that I like and that I work with, but there's many of them out there. Okay, my favorite is Olympia Trust. I've been dealing with them for many years. So if somebody truly wanted to be looking into that, what I would suggest is they get a hold of each one of these companies and talk to them and learn, because it's a simple process where you'd have to take the funds you have in another account, and you don't deregister them, you don't take them out, it gets moved laterally.
Pay tax if you cash out. No, they
Yeah,
literally.
so don't do that. But I mean, it's but so for instance, if you've got money right now in a mutual fund that and it's not so much how much you're making, it's also how much you're spending on fees. People have to pay attention to that with different programs out there. And if they truly wanted to be putting money into, they has to go through a trust company that deals specifically with mortgages. Okay, so let's go, and I'm not going to spend much time. If somebody wanted to know more, they could call.
People are wondering, is there any cost for me to move my money from RBC, let's say, into now being, I want to invest my 100K in a mortgage somewhere. These companies literally only charge like a nominal fee.
Well, the difference, the trust companies do not charge a percentage. They charge. So for instance, now I could be wrong right now, but last I heard Olympia Trust charged you, I think it was $125 to set an account. Big deal. Whether you have $1 million or whether you have 100,000, doesn't matter. 10,000, that's what it costs. And then, so I mean, it's a whole different concept how they're set up. That's why what I used to do in the beginning, I would do a lot of this for people. I do not have the time anymore. I am busy doing mortgages. If somebody truly wants to learn about how the registered funds would work, this is what I'm going to suggest. And I should have put this slide up. There's a book they should buy. They can get it on Amazon, and it's called The RRSP Secret. I'm sorry, I meant to do that, because that book, I read that back in mid 2000s, and it's as relevant today as it was then. And then you get a hold of these different trust companies and you do your research, do your due diligence on how to do it.
Essentially what these companies do, guys, just so you understand, they facilitate the transaction. So if you have money in a registered account right now, whether it's an RSP, whether it's a TFSA, whatever it is, and maybe you're not happy with the returns you've been getting, you like what Susan has been talking about, you like the idea of getting these 8, 10, 12, 15% returns that are backed by real estate and they're predictable, and you want to start doing that with your money, these companies will facilitate. Now keep in mind what Susan said, there's a minimum 100K investment. Now,
That's with me. There's
now,
there's other people that you could go less.
And I can refer you to some other people if you have less than 100K, by the way.
Yeah.
That also specializes in the space. Susan, what I like about Susan is obviously her wealth of experience in the industry, and also I know you do due diligence on every single deal that comes your way. You're very careful about where you're placing your client's money.
Yes.
Correct. So one thing I wanted to say, Susan, that there may be people sitting in our audience that are thinking, 100K minimum, where am I going to get? I don't have 100K. So, maybe some people out there do not know that you could, and you brought that up earlier, the fact that somebody could access some of the equity in their principal residence, via something like a home equity line of credit or potentially refinancing, because rates are so low right now, with the A lenders. If you're in a credit worthy position and you're sitting on some equity in your home, which is, by the way, doing nothing for you, it's not putting money in your pocket. The traditional view people have is that you should be paying down your mortgage as quickly as possible. That's what we always, I'm paying off my mortgage. That's people make that their life goal, to
I know
their mortgage. And then what? Okay, you no longer have that monthly payment, but you also don't have any money coming your way. So the idea here is that if you could borrow money at 3% and then take that money and get paid 8% or 10% or 12% on your money, you're making money off that spread. And
I do it all the time. Now the thing is though, and that all depends on a person's comfort level, but and then also they have to be prepared. If somebody did use their house line of credit to lend, they have to realize if they ran into a situation, let's say the person was late a couple months, or in the end ended up having to sell the house and can't pay until it was sold, things like that, you have to be prepared to still make your monthly payment on your line of credit. So these are things you have to think about. Sure. Now, by the way, I know I didn't say this earlier, but I need to clarify for people. The amount of people in the entire mortgage industry that go into foreclosure or power of sale is so small. It's less than 0.1% of all mortgages. But having said that, even though it's so small, the most prevalent area that it happens is in private mortgages. But it's very, very rare to ever see that if they're set up properly. So just so people, I don't want to scare people off. I think it's a great vehicle, but you need to be knowledgeable to get into it. So, okay.
Do you want to still talk about this?
Well, you know what? I know we're over time now. We could maybe another time just talk about private people who want to borrow private money. It's like they're two separate topics, and they're both very broad, as you can see. We kept getting into other discussions. So I'm happy to leave it here if you'd like. Yes. So that's what we need though.
Yeah. No, Susan, thank you so much. I think this was a good introduction to the topic. I'm gonna leave this slide up for a minute. Sorry, I'm gonna go back to here. Oh no, let me go. I'm gonna bring that back up. 1 second, Susan. Yeah, your contact info. And I'll go back into Facebook to see if there are any questions. Okay.
Okay.
And I don't know if anybody's been watching us live. Sometimes people do. Yeah, there are 3 people watching. Thank you very much, guys. Oh, thanks, Rob. Okay, wonderful. Thank you guys for watching. I don't see any questions, just some comments, Susan. And I'm going to leave your contact info on the screen. Everyone, if this sounds interesting to you, I definitely encourage you to reach out to Susan with any questions you may have. And now, on that note, Susan, since I brought up the idea of people potentially accessing their home equity, which they can now potentially access at a very low interest rate in the environment that we're in, to then take that money and reinvest into something that is going to make them a lot more of an interest rate. You mentioned that even though you're a licensed mortgage broker, you do not go as far as helping people refinance. That's not, did I understand that correctly?
Yeah, so what I do when that happens, when people need, it's not fair of me to do that because I'm not paying attention now to what's going on with the banks. And in order to really service your client well, you need to be in the trenches on it. So what I do is I have different other brokers out there that I refer people to, that I know and trust. And depending on their situation. So yes, but I physically don't, I chose not to do that right from the beginning when I got involved because I want to be good at private lending.
Yeah, I get that. And so on that note, I also know some amazing mortgage professionals, guys, that can also help you with that step. So if you're thinking, man, I have like 300,000 of equity and I'm sitting, and it's not doing anything for me, I'd like to use it for something like this. You can reach out to me as well. I would be happy to put you in touch with a mortgage broker who could help you look at your options for accessing that equity. And then once you know what you're looking at and what you've got to work with, if you have the minimum 100K that Susan requires to work with her, that's when, am I correct on this, Susan?
That's totally correct. That's totally correct.
Yes. And then you would help them place their money in a proper deal, in a deal that makes sense.
That's right. Sounds
of course,
good.
They have to like it too, but you tell them, hey, listen, I have this investor, they're looking, this is the deal. That's the sort of thing that you do. Yes.
Yeah. I mean, I go, once I get a file started, then I'm going to my lender list and I try and be fair who's been waiting longer, but it also depends on, like, for instance, if somebody says, oh, I only want to lend in the London area, I'm not going to call them about one I have in Peterborough. Sure. So that's why I say it's important as I bring lenders on board. I get to know them and I have a file on each and every lender I have to refer to because my memory's good, but not that good. Actually, some days not good at all, but yeah, so that I'm, say some people only want to lend on first mortgages. Other people only want to lend on second mortgages. So I try and make the fit work.
Perfect. Amazing. Yeah. Depending on each client's risk profile and their aspirations and their goals.
Yes.
Yeah. So with that said, Susan, thank you so much for joining us today.
Oh, you're welcome. I thoroughly enjoyed being here.
Wonderful. Thank you so much. And thanks everyone for watching. Somebody is asking if there's a minimum investment. Yes, with Susan, it's 100K Canadian. I will, and I mean, now that being said, Susan, sorry, there's one last question that just, because I said Canadian. And the reason I ask is because I actually have contacts that are maybe watching this from the US or they may be in other Canadian provinces, not Ontario. Would you be able to help them as well? Or do they have to be based in Ontario? How does it work, if I may ask?
No, for lenders, I can use lenders anywhere across Canada, but not in the US.
Okay.
As far as a mortgage, if somebody needs a private mortgage, at this moment in time, it's only Ontario. As I told you earlier, I only recently opened my own brokerage. I was with Streetwise Mortgages prior. So I will be expanding more into other provinces later, but right now, but if somebody truly need to mortgage elsewhere, they could still talk to me because I have my connections that I could send them to, but I can't actually participate in it, which is no big deal. So
no, thank you. But in terms of accepting funds from potential lenders, you're saying they could be
anywhere in Canada. Yep.
That's right, because even the institutions like those trust companies, they are Canadian based, for example, so they can facilitate this across Canada. Yeah. So amazing. Thanks again so much, Susan.
Okay, well, you're welcome.
Thanks everyone for watching and have a great rest of the week, everyone, and we'll see you next week, okay?
Okay.
Thanks, Susan. Bye-bye.
Okay, thanks. Bye.
Stop share and okay, and meeting for all. Okay.